Yeah, more of the same, actually. I thought that the move was over, but I mean, we didn't have a dramatic move in the markets yesterday, at least not for the general markets. We'll get to some other sectors. There were some more dramatic moves, oil, for example, uranium to some extent. But let's just look at the general market. So S&P, basically it was a flat day. Again, we had the S&P and the Nasdaq green. The S&P was basically flat, but green, whereas the Dow and the Russell have continued to be the weaker ones. So that's just continuing the move up. You could say it's continuing just by not breaking down. To me, it's continuing. So S&P, gapped slightly higher, closed basically flat. Prior resistance acted as support, so not bearish at all, not exactly bullish, sort of a sideways day, sideways up if I had to choose a direction. The Nasdaq, same thing, just slightly higher, gapped higher, didn't close at low of day, closed slightly up. The resistance, I mean, it did close at absolute high of day on Friday, but that resistance, which is correct. I mean, look at all these candles over here, acted as support. It's just incredible. It's really incredible. It's euphoric stuff. Again, I remind myself of the DAX, zoom out a bit, the CAC, the FTSE. Actually, look at the FTSE there. But, we did venture all the way up to new highs. So the NASDAQ being all the way here is not the craziest of market moves, but still, it just feels wrong. It's this AI euphoria. There's nothing new to AI. It's been there for years. Yes, it's a lot more advanced, and it will contribute to productivity, but this is just a little over the top .com style. And if you look at the the price to sales and all this of some of these stocks like Nvidia, it's literally mathematically impossible to value it where it is. I actually added to a short in Nvidia the other day, yesterday, sorry. Where was it? It was actually at low of day, which is not what I normally do at all. I just thought, nah. So I think my average is like 393 or something now. I added just at 400. Anyway, whatever. Point is, Nasdaq is for me it's still too much, despite what you see in the CAC, the DAX, and the FTSE. But yeah, otherwise it was a green day, not bearish yet. The Dow Jones, I mean, look, you can see it's weaker. It's trying to breakout, close above this descending. But look, think about what the Nasdaq's done, the S&P. Once we have a bit of a move down, this goes straight back down again, and we start venturing down to this low area. So for me, the Dow Jones is evidently weaker. The Russell, even weaker. It doesn't have the descending breakout, which for me is like a bullish flag. It's the most bullish pattern. Just to look at the Dow Jones again, this is a breakout of this is the most bullish pattern. Hopefully you're trading a stock where it's actually on a bullish trend, and then it's just consolidating for a bit, and then it breaks out. So the momentum's with it. The bias is to the upside. Here, the Dow Jones, you can't say is a bullish pattern. So it's not the best of descending breakouts, and it hasn't broken out yet. Plus, we know that other markets like the S&P and the Nasdaq will influence it, and I think they're more likely to go down. So I do think that we will actually go lower in the Dow. And the Russell, look, no descending moves really. This one here wouldn't really count. It's just horizontal. For me, it's just going to go lower. I mean, look, one red day, we're testing here, another red day, and we're closing below this line, and then we're testing straight down here, and then we're looking at the absolute bear market lows. And I think that's all you need to know. Whilst tech's looking like, oh my God, it's euphoric.com stuff, kind of, the Russell is 4 or 5 straight red days away from new bear market lows. And it's the Russell that represents, what is it, 70% of the US economy, whilst the NASDAQ is just cyberspace stuff, with a lot of companies based outside of the US, you could say, at least compared to the Russell. So Russell and Dow remain weak, and they represent the US economy combined a lot more than the NASDAQ and the S&P. In my opinion, let's look at the financials. Straight away, you can tell they look like the Russell, and this is the senior financials. Again, look what we've done in the general markets. You'd expect these to be higher at least. It's not the case. This looks very weak, actually, just like the Russell, 1 or 2 days away from just hitting its support. Let's just look at the Russell real quick. Look at the similarity. So, and let's look at the KPE, which is actually for once, or at least the last couple of days, been outperforming the XLF, the more senior financials. That's because the juniors, if I can call them juniors, regional banks, they've been destroyed a lot more. So when you have a move up, generally in the markets, they'll move up more because they've been crushed more. But still, it's a bit like the Dow Jones. You know, you've got this descending and you still haven't broken out. So what happens when the market moves down? You can see it wants to do it. And I said it in the last video, this is starting to look bullish, even though I zoom out, I think about the fundamentals, I think about, you know, these general markets can go down any moment. The S&P and the Nasdaq, they can retrace hard. I can't imagine the banks going up too much in that environment. And these two look very similar. So KBE, KRE, I can lump together. So you can see, you know, hammers forming. Normally, if this was a random stock, I would look at it and say, this looks due for a bounce. So I'm going to stay with a bit of a neutral rating to the regional small banks because this looks kind of good. But again, fundamentally trash, and rates, we know they're generally going up. I'll get to them actually now. But yeah, I'm stuck between, you know, the market's going lower and the XLF going lower. But then when I look at the regionals, I think, wow, they're sort of springboarding ready for a bit of a pop. But if there is any pop, straight back down again. So I'm not sure what to think. I think I'll let the markets make the move. You know, like if I see the Nasdaq start to go down and the Russell and the Dow Jones going lower, I think these have to go lower. And then, you know, again, 2 or 3 trading days away from looking very bad though. So this kind of anything can happen. If I can cover myself by saying that. All right, let's look at the rates because this remains the most important thing. Rates actually are doing a bit of a retracement. So that's what happened yesterday. You know, the 1 year, for example, we've seen this, it's hit 5.3, actually ventured higher, and now it's just retracing a little bit. Nothing too crazy. So, you know, even a move back down to here, you're back testing prior resistance, and you may even interact with the ascending. So you could imagine it just sort of going lower, for example. And, you know, when I say something like this, like it could go lower and then bounce back again. So you're hitting this line, plus it coincides with ascending. But every time I say something like this, it kind of happens. It just happens quicker. It's just like bam, bam. So I wouldn't be surprised if it actually, instead of taking 3 or 4 days, it takes 2 or something. But generally, this is what I see happening across the board. So that's the 1 year. It looks very nice. This is just perfect charting. Let's say the 2 year. Well, I just decided to take a bit of a retracement in the middle of no man's land. I mean, you know, I left these 2 levels, and obviously there's a huge distance between them. So I didn't expect it just to staircase up. And I'm not sure whether this gap was any resistance. You could say it was kind of, but yeah, it just decided to retrace here, probably coinciding with the 1 year and other yields. Let's look at the 5 years, same thing. So retrace, look at this back test here. What happens? Do we just overdo it a little bit, which is very, very typical? So maybe we go back down to 3.7-ish and then go back up. Let's see. Depends what other yields are doing. The 10 year, same thing. It's come back down to prior resistance, but maybe resistance is really here. So, you know, I would forgive it if it just keeps going down a little bit more, just like the 5 year. The 30 year, again, maybe a little bit more, coinciding with this horizontal and the ascending, a bit like the 1 year actually, right? So you can see that they're sort of retracing a little bit, and they could do a little bit more. And then therefore bonds are going up, you know. But is it the sort of move where bonds are going up because of fear? Not really, because the markets are not exactly going down. So I think it's more of a casual retracement in yield rather than some start of a panic. But who knows? Maybe people can misinterpret it and then a panic starts. But anyway, that's what I see happening. Maybe a little bit more of a retracement in yields, but nothing, you know, the move up is intact. It's ready to keep going. Let's just quickly look at European yields. Yeah, look at this. This is a pretty strong retracement, 2 days back to the ascending. That will be interesting to see what happens in EU yields, actually, because it's really in a tight wedge here. And then finally, the British yields, which are a bit different. Look at that. They're also retracing a bit, pretty much hitting their absolute highs again. So that's getting scary for the British. Maybe we go back down to here, 4%. Sounds good. Yeah, 4% actually. That would make sense too. A bit more of a retracement in the 30-year, same thing. So yeah, they've just marched up a lot, small retracement, and then back up again. So that's yields. Let's look at the dollar. DXY. Now, I took a look at this just now before doing the video, and I'm doing the video in the morning. If I'd done it last night, honestly, I would have said, maybe let's move to the 15 minutes. Actually, I hate all these lines, but they're all valid. Look at this ascending line here, everything's in line, and then we started to break it, and now we're retesting it. So interesting. If I'd done it yesterday, I would have said, look, we've broken it. So maybe it's topped out a bit, gonna move down a bit. What it's done so far, yeah, it followed through with the breakdown, but now it's back testing the breakdown. But it looks good. It doesn't look finished, but maybe that's all it's doing, back testing it, and then it comes back down, and then we really are just leveling off here at, let's say, 104 point whatever, 104.4 is the high, 104.5 max. And then we break down, with maybe support being here, support being, let's say, 103.8. You see the low of these two candles. If we start, especially a close below that, maybe we then start to descend again. I actually thought that we'd go a bit higher, and obviously it's not done. Maybe we do go a bit higher. I thought we'd venture into the 105 zone and then get it overextended. So I don't know. I just feel like the DXY is doing something it hasn't done since it started this move up. Look, we have this one red day back up, one red day, nice curl back up. And during this whole period, I wasn't thinking it's done. But now you've got sort of, 1, 2, 3 candles that are all sort of hovering in the same area. We've breached the ascending. It's just that today so far, we've, resurged higher. But again, the day is certainly not over. It's like not even 6 a.m. here in Europe. So let's see what happens. I think today's candle will be probably the most important for the short term to determine whether we go back down in the dollars. So maybe the dollar's having a little short term top here, but yeah, I don't know if the move down is going to be aggressive. If that is the case, I just feel like there's a bit of a magnet to 105. At least get here because we've got this descending line too. I don't like how many lines I've got here. I'll clean it up. But they all have they're all sort of justified to some extent, but maybe some of them are irrelevant now. So I'll try and clean that up. But I think DXY will be very interesting today, very significant today. So let's see if it can hold this gain. And if it starts, think about it, if it starts to descend a bit and we close near low of day, for me, you've got 3 or 4 days where it hasn't moved higher, it's closing at low of day. It's not going to take much to just drop it. So people get very excited from that. Yeah, so that's the DXY. And if that's the case, I'll look at currencies in the next video. The euro, the pound, and the Japanese yen. Okay, let's look at commodities. Copper, which was weak, bounced a little bit, and now the bounce is done. Look, we bounced back to prior support because apparently this was support, not strong support, and now we're venturing back down. So let's see what happens with copper. Obviously, the dollar's going to play a role here. If the dollar starts to move sideways and then lower, maybe copper can go back up, maybe to this range. But so far, we're retracing the pop, right? 2-day pop, bam, bam. This nice horizontal support. It did what it's supposed to, but not the strongest support. So we will venture back down. If the dollar goes higher, we will venture back down here. Probably not today, but so let's see. If this breaks, then we go back down to this range, 3.38, this range. So let's see what happens. Again, I think the dollar will come into play here a lot. So maybe copper is able to hold this level for now. Natural gas, this is retracing way more than I thought. We screamed up a little bit, we came back down, but then look at this, it's like 2 or 3 days that I didn't think we'd go back down this much. But look, the candle, yesterday's candle, Tuesday's candle, it did close off its lows. You see what I mean? So I just feel like today, if we don't even venture down here, we're going to put a bit of a bottom here. And let's see how much higher we can go. Let's see if we can take out this 2.55 zone again, back up here. So I think that the reversal will start today. And if the dollar doesn't go much higher, and it's already at sort of a pretty high mark today, very early in the morning, maybe we can, if the dollar sort of tops out a bit, this will definitely rebound. I think this is due for a push back up actually, because this is a little overdone. You don't usually have a strong move like this and then all the way back down. I wouldn't expect that. So for me, natural gas now is more likely than ever to bounce. I like natural gas. I'm still in it. Oil, though, I really don't know what to think about oil. I mean, oil is likely to go down if the market goes down more than natural gas. Oil has not come down more than natural gas. Just zoom out. Okay, oil went all the way up to 100, let's say 30. Look at natural gas, though. You know what I mean? My plan is not to compare the two, but it's just now that I'm done with natural gas, it's just my immediate thoughts. But look at this. We've got this ascending line. We bounced off it. Great. But look, I did say a few days ago it needed to bounce strong. And we had a sort of a strong day up. But, look at this, just straight back down again. And that was with the market not being down yesterday. I'm not even sure if there was oil news. It's just the weakest chart pattern is the ascending pattern. And we seem to have that little ascending. If I just zoom in and look at that, bam, back down again, it just feels like it wants to test this range again. It wants to test the 65. And honestly, if we venture back down to 65, it's going to look really weak. Look, we were hitting the resistance in the 83 zone, 82, 83, 84, 82, 83. It's just so strong. Look, sell back down, back down, back down, back down, all the way down. Strong bounce because we hit the ascending. Very strong bounce with the news, we're going to cut production, still back down again. I didn't expect that. It reminds me a bit of what natural gas is doing. You have this strong move and back down, but this is way more the case. But again, double bounce, but we haven't gone higher. It's lower highs. And look, we flushed the ascending. For me, this looks very weak. And actually, I can imagine oil. Basically, I can imagine oil going all the way back down here, tiny bounce, and then flush, which is surprising fundamentally. The US has to refill its strategic reserves. The OPEC countries have said, watch out, shorts, we can squeeze you. And I don't doubt that. It's just, if you look at the chart, this looks like it wants to flush. But I'll tell you what, if it flushes, I think you'll have a very strong buying, maybe straight underneath, or maybe it needs to go into the 50s, a big short stops, and then people buy, like, imagine 48 all the way back up to 60. I would love to see that because I'm not really in oil. I'm in a stock that doesn't follow oil. So I'd like to see a bit of panic. I don't know, it'd be exciting actually. But I probably would add to my oil stock if that happens, if it does start to go down. But yeah, I think oil just kind of wants to go lower. It's not a strong looking chart, really, especially this lower high and then flush of the ascending. Uranium, I like this. Again, uranium, look how tight we're getting to a very, very forced decision very soon. If I zoom out, this is just such an obvious and beautiful disciplined chart. Now, if we zoom in here, we're hitting the lows. Ascending is the weakest chart pattern. Look, we flushed it yesterday. Not like the markets are going down much, but, we flushed it again. It's quite impressive, actually, how weak commodities were yesterday. It's not like the dollar was that strong. So, again, what you needed was a big move out, big breakout, which is what we got. We broke out of this very, very mini descending, broke out of it, retraced, normal. And then I really thought here, that's it. This is the move the bulls want, like breaking out of this low zone back to the high to finally test this descending. We haven't done that in a long time. No, we had a big retracement again, a bit like natural gas, a bit like oil, just this big retracement of a small pop. And it just overdid it. And then yesterday, we just flushed this mini ascending. So for me, it wants to go back down and test this zone. It's just too weak. And if what doesn't go up must come down. So yeah, sure, we can bounce a little bit, retest the ascending, but I just feel like it wants to test this again, And if we test the low down here, bulls are going to be scared, and they should be, because as soon as we flush this, especially 18, for me, it's a close below 18, because maybe this is a rough trend line, whatever. Maybe someone else has a more accurate one. It's pretty accurate to me. But if you're closing below 18, trust me, it's breached your ascending too. So I just feel like a close below 18 would really do it. So watch out, uranium. I don't doubt it could bounce a little bit, but it looks very, very weak there. Okay, let's move to gold and silver. So gold actually put in a bit of a engulfing. I really like this. I mean, this ascending did its job. I said it here when we bounced a little bit, but then yesterday I was watching, I saw that we were going a bit lower, like 19. I always said this zone, this horizontal cone sign of the ascending. Look at this. It's beautiful. It's absolutely beautiful. It did exactly what it should have done. And when you see the candle at the time in the 1933, 1932 even, you think, oh no, it's not respecting the technical. It did already, but look at this massive engulfing. It's not huge, but you look at what commodities did elsewhere: copper, natural gas, oil, uranium, all red. But then you got gold. I mean, I'm doing it the next day, so it doesn't look green, but gold was green by quite a bit, just when it had to be technically. So it really did work. That's why technicals work, or at least they help a lot. So that was beautiful. Okay, today the day's just started, so it's irrelevant. I don't expect a huge red candle today. Again, anything is possible. We've seen retracements that don't really make sense, like look at natural gas. But in one day, I wouldn't expect to move all the way back down to the lows or a close below. That would require news. Maybe we go down a little bit, back test again, but it looks okay. Maybe we start to move back up to this zone. Maybe we start to test the 1980 zone, actually. Not today, but that's kind of what this candle suggests. It's an engulfing candle. We ventured lower and closed all the way up higher. So strong support, and it makes sense. That's technically what this was supposed to represent. So I'm very happy about that. Silver, on the other hand, yes, it had a green day too, but not by, it's basically flat. But okay, we've seen days like that before too. Gold just completely outperforming silver. It wasn't a pure sort of strong commodities day, so silver was acting more as a riskier commodity, you can say. But look, if gold starts to move back up to the 1980 zone up here, then you can expect silver to probably go back and test 24. Actually, that would be about the same thing. And you could almost say this descending line is irrelevant now that I think about it. Even though it was relevant the whole time, especially during this period and during this breakout. But the back test, and I said the back test, it wouldn't act as much because gold wasn't anywhere near resistance. So it acted as resistance for maybe one day, but it was really short term. For me, you can delete it. You can delete it. So yeah, that clears the picture a lot more. So yeah, if we've got gold going back up to 1980, silver 24, and then we'll see. I'm not going to start looking at higher numbers because there should be a lot of resistance, if we start to venture higher. So I'm just going to put this as, I'll delete it for now. I'll look at it later. Let's just keep it clear. But for me, it's 24, actually, the next zone. So that's gold and silver. I'm not going to repeat myself too much. That's, oh, for the move down in silver, by the way, well, yeah, gold has to crack below 1930, doesn't it? Really, you got gold, and I don't see that happening today at least, but imagine we drift lower and we start to close below 1930. At that point, you can just delete the ascending. And then we probably flush to, yeah, then we're going to see maybe even below 1900. But let's see if we close below 1930 first. If we don't, I'm looking at this 1980 zone. You know what? I can delete quite a few lines, to be honest now. This one can go. This one, I just feel like 1980 generally. So let's see what happens there. So 1980 and 1930 for me, gold. And that's still how I'm judging silver. I'm just looking at gold. And that's worked so far. GDX, look at that. Not that strong. First of all, GDXJ was stronger than GDX. GDX was red, GDXJ was green. That's pretty strange, especially with silver being flat and gold being strong. So there's a bit of a, but the only reason I can think of that is, again, the ascending. Look at GDXJ. GDXJ is much closer to its ascending. Higher lows. you know, not exactly higher highs, a little bit, but higher lows. And it's probably because it's close to its ascending, because the fact that silver was flat, gold was up, makes it even stranger. But if you think of the technicals, GDXJ is a little bit more oversold than GDX. GDX is further away from its ascending. Maybe that's why. But look, GDX also closed worse than it did the last two candles. So actually, GDX won't take much for it to go lower. So let's see what happens. Kind of need gold to show some direction here. But otherwise, if we go, you know, if it's a bit of a red day, then GDX should go lower. I'm talking about 29.50 at least. GDXJ, if that happens, probably goes lower too, but then probably bounces quite strong. I just feel like 36 is a bit of a zone. So unless you've got an almighty flush going on, I don't see GDXJ really going much lower. And if we have a move higher, let's say gold going to 1980, then I'm not sure how much higher we'll go, but 38 to 39, GDXJ, GDX. Let's say 32. That would be enough. But again, this is not very strong looking stuff. You really want to close above 31 to confirm a bit of a move higher. But, you know, we've been all oversold here. You can see it's just a pretty steep decline in both of them. So maybe a bit of a bounce is due. Yeah, that'll do. That'll do. I hope to do another video tonight after market close, but I hope that was useful.